Good afternoon and welcome to this week. Oh boy, what a week it has been. Well, actually, what a couple of crazy weeks we've had. It seems like a lot has changed. A lot has changed, that's for sure. And we are finally on the other side of that open to close marathon that we did on Friday. Holy banana bread. That was a long stream. So, but I will admit, it was pretty fun. It was pretty fun. And it was really nice to be able to see some folks from the community. So we had a lot of people contributing and jumping in. That was absolutely awesome. I loved it. Those of you who have not seen it yet, feel free to watch bits and pieces. I wouldn't recommend just sitting down for the whole 7 hours right in a row, but unless of course if you got nothing to do, you got 7 hours. So it is there. It was a lot of fun. Now we need to start thinking about what are we going to do at 5,000? What the heck are we going to do at 5,000? I don't know. I don't know yet, but it's going to be fun. We will get there, of course. Now, this weekend, I guess right now I'm competing with the Olympics. So and hence the little picture over there on the side today. I thought I would go with an Olympic theme, and the poor beaver swimmer is getting a 1 from the bear, but the bull's much nicer, much nicer. So we had stuff that happened. So this weekend, I mean, holy cow. And this is stuff I don't even have in my news. We had the Bitcoin conference yesterday in Nashville. And a certain Donald Trump got up and had a few things to say. Now, he pretty much said everything that everybody wanted him to say when it comes to Bitcoin. You know, he talked about a strategic Bitcoin reserve. He pretty much... It's kind of interesting, and I've noticed this with Trump sometimes, is that he will promise exactly what you want to get your vote. So I don't know how much credence I put into all of the promises he made. He even said he would fire Gary Gensler, the head of the SEC. So we will have to see. We'll have to see how that all works out. What else has been going on? Oh boy, it's been a fantastic week. We got lots of good news. We got lots of stuff that we're gonna talk about today. Of course, we're gonna answer you guys' questions. We're gonna do it all. We're gonna do it all. I should probably quickly mention Blossom. So Blossom, of course, is that social media app that is designed for investors. It's been around now for a little more than a year. Most of the big Canadian finance YouTubers are all over there. So it is a good place to connect, good place to talk, good place to get ideas. It's social media. But if you're interested in trying it out, there is a link down below. Definitely head over there. If you do, follow me. I will follow you back. If I don't, let me know. Let me know, because, I might have missed one or two somewhere along the lines. I hope not, but it could have happened. All right, let's get into the chat. Let's get into the chat. See what's going on here. Jonathan says,
hello.
To
start a video call.
No.
Tap on the camera icon.
I don't want to start a video call. Alexa, go away. Stay away, Alexa. All right. Sorry about that. I don't know how she figured that I wanted to do a video call, but hey. Anyway, Jonathan says, am I late? Not this time. Satan? I'm not sure what Satan has to do with this, Jonathan, but I am now picturing you with like goat horns or something, trying to get to the stream on time. I just don't know. All right. Lisa says, hello, everyone. And Vic says, gold medal for managing traffic and getting here on time. Nice. Holy cow. Yeah. It's always good when you're here and you're not driving. I don't have to worry about your safety when you're typing messages in. So that's always not too shabby. Let's see. Al is Jello, or that might be a hello. Either that or he really likes jiggly desserts. Either works. Jonathan says 5K bungee jump. no, no. I'm not going to fall. I'm not jumping out of an airplane. I'm not jumping off of a bridge. The 5K, the 5K the 5K reward or fun or event or celebration. It's going to be more down to earth than me jumping, and I'm not going to space. Well, space, maybe I'll go to space if if that were an option. I might, but I wouldn't jump from space. Mario's in the house with a good afternoon. In-person meeting for 10K. Ooh, wow. That would be interesting. But I mean, here's the thing. We'd have to we'll talk about it. When we get towards 10K, we'll talk about it. Who knows? Right now I'm focused on 5K and then from there, probably once we hit 5K, we're not going to celebrate every 1,000 at that point. We'll do 5K and we'll probably do 7,500 because I kind of like that number. And then we'll do 10K. So, but keep in mind, subs come faster as you get bigger. So even though these numbers get further apart, they'll probably come in at just about the same kind of pace. So, yeah, and it's fun. It's fun to always do something a little bit different. Like I said, I really enjoyed that long stream. Mario says, I'm done with the Olympics. So many cheaters. Oh boy, I've not watched any of the Olympics. All I know is that Canada hasn't won a gold yet. So I'll side with you, Mario. It's like, come on. Or if we're gonna cheat, at least cheat with some maple syrup so a couple of medals come Canada's way. But yeah, I don't know. I will watch, like, I don't know. Summer sports just doesn't do it for me. But I will watch a little bit of winter sports. I guess that's the Canadian in me coming out. And we got Mary in the house. So everybody, Mary's going to tell you to hit that like button because, that's her shtick. That's her stick. So hit the like button. Let's turn it let's turn it blue, not boo. It's not like it's Halloween. Hello. We have Vineet in the house. Hi, all. Now, Vineet has a friend who just got scammed. I can't remember the name of the company. Let me just take a look because it's sitting over here. All right. What was it? GS Partners. So apparently his friend got scammed by a group called GS Partners. I don't know the details. Vineet, if you want to throw the details in the chat, we can talk a little bit about scamming. I can tell you guys I'm very adamant against it. And you got to be careful. You absolutely have to be careful because they are getting craftier and craftier, and now they have AI. So, here's the thing. In the past, you could almost tell if something wasn't legit because, you'd get this broken English, thing telling you that you got money from the CRA or something. But now AI is writing it for them. So it's not broken English. It's perfect English. And it's looking more and more like something that could have come from perhaps the CRA. So you got to be really, really careful. Anybody sending you a link, that's the thing. A link or something you have to download, those are the things you really want to be wary of. And anybody sending you an offer or telling you that they can get you some free Bitcoin, or they can give you, they're offering you something that sounds too good to be true. They usually are. They absolutely usually are. It's very rare that somebody's out of the blue is just going to reach out to you and give you a free iPhone, or that they're going to say, hey, send me a Bitcoin and I'll send you two. That never ends well. That never ends well at all. So just something to keep in mind. We got Sammer in the house, and Jay is in the house. Vic says BMO Investor Line promo up to 3,500 for new accounts, but you need 2 million. Okay. That's a scam of another level. It's a legitimate. It's not really a scam, but sometimes it's like, oh, here's this great deal that we got from the banks, but then they want you to put 2 million in, and you probably have to keep the 2 million in there for a bit of time. So when you think about how much money they're going to make off of that 2 million, that 3,500 is not a good deal. It's not a good deal. Avalash is in the house, and he's saying hi. Let's say BMO is giving 3,500 for 2 million. There we go. Exactly. Not a great deal. Let's see. She sounds a bit cheap. What isn't Wealthsimple 1%? That's like 20K right there. Look at that. Look at that. Yeah, I mean, you can make with 2 million, you're going to make a lot more than. Now keep in mind, well, let's just back up for a second. It is their investor line. So you can still make money with that 2 million within their investing account, but they want you to keep it there. They probably have a minimum of a year that you have to keep it there. But I don't know. I haven't actually looked at the deal. So you can still make money. You can still, for example, you could put the 2 million there and park it in, an ETF or something that's pulling you, let's say 7%, and you'll make a ton more than 3,500. Let's see. Canada does better in the Winter Olympics. Yeah, absolutely. Absolutely. Prairie says, good afternoon, Candace in chat. Happy Sunday. Good to see you, Prairie. Good to see you. Prairie was with us a long time during that 7-hour chat. So a huge shout out for that. That was awesome. That was awesome. Al says, hi, Prairie. Vic says, $500 if you move 250,000. Yeah, I mean, it's, I guess this is my opinion on that. It's like, it doesn't matter who it is. I mean, Wealthsimple does the same thing. Like, they're trying to get you to move your money into them, and they're offering you something for it. And that's fine. That's fine. Because, if you move, like in this case here. So for example, let's say you moved $1 million. We'll go with $1 million. So let's say you moved $1 million into, or I guess 2 million over into investor line. So what they're going to do is, it's not like they can't really do anything with your 2 million, right? Because you're going to invest it. What they can do is they have their own little spread and things like that happen. So when you're investing something, you're usually paying a little more than what they're paying to get that stock to you. And if it's a stock that they bought, if you're buying a stock at current prices, they may have actually purchased that stock when it was much cheaper, and you're buying it from them. So they're making that little bit of a spread. And when you've got 2 million over there and you're buying a whole bunch of stuff, they're getting their little pieces of that. So, that's kind of where they're getting their money on that. Prairie says, afternoon, Al. All right. Vineet says, and this is in regards to his friend. Let's see. I feel so bad for him. He dropped $70,000 with them and is still drinking the Kool-Aid. He met with a lady on Zoom and fell for it. What was it? It was a car scam. Oh, it was a car scam. Okay. All right. I gotta think I got a general idea. So there's a lot of scammers out there, for example, that will, they might be selling you something, like perhaps it's a car. So perhaps you're over there on Marketplace and you see this nice looking car and it sounds like a good deal, and you're talking to somebody, and next thing you know, they're like, well, if you want me to hold this car for you, I need a deposit or something like that. And the same thing happens with apartments. They do this a lot with apartments. So I don't know if that was the exact make of what happened to your friend, Vineet, but sometimes they'll do that. And a lot of times, especially like I know cars are one things they do it, but with apartments, oh boy, that's a big one, because where there's a high demand for apartments, it's really easy. Like if you're desperate for a place and you found a great place on an ad on Kijiji or something, and they're saying, well, look, I need half a month's rent to hold this. Otherwise, I just got so many people interested in it. A lot of people are like, oh God, I absolutely need this. Yeah, let me send that to you right away. So that's one way they can get it. So they send you the money, and you never hear from the person again. The ad disappears. It's gone. Another way they can sometimes get you as well is, they can send you links. So for example, for like e-transfers and things like that. So usually with the e-transfers, though, it's not them that have the thing. It's usually you that have the thing. So what they might do is let's say you were selling something. So you're selling a secondhand TV. Well, what they will do is they'll say, yeah, I totally want it. Can I just e-transfer you the money? And you're like, sure, yeah, absolutely. So they send you what looks like an e-transfer. You click on it, and it goes into your bank, and you put in your username and password to get into your bank. Everything looks legit. Then usually it'll crash when you're in there. But what you don't know is you're not actually in your bank. You're in a site that looks exactly like your bank, and they're harvesting all of your user information, your username, your password, and they're going into your bank and cleaning it out while this is all happening. So by the time you realize something's wrong, they've already been in your bank and they've already taken what they can take. So you got to be really, really careful. Here's kind of that thing, like, and you're thinking, how the heck, even with an e-transfer, what the heck? It's kind of like that. It's almost at the point. I'm gonna put this out there. It's almost at the point that you need a separate account for e-transfers. So, for example, if you had just like a crappy little account, it could even be like you could even get like let's say, for example, if you don't use EQ Bank, sign up for EQ Bank, have an account there, then do all your money transfers there. So that way if somebody ever does do that scam to you, they're going to find an empty account. There's nothing in there that they can steal. Because, if it's not a scam and real money comes in, you just go over to that little account and you'll just transfer it out. It's almost getting to that point. It's almost there. So you want to be really careful. Now, obviously, if you're getting an e-transfer from somebody and you know that it's coming, then yes. But I'll tell you what I would be wary of. If out of the blue, somebody you knew all of a sudden sends you an e-transfer that you're not expecting, I would reach out to them before I even clicked on it. I would reach out and say, hey, did you send me an e-transfer? And they, if they say no, then I know it's a scam. If they say yes, then I'll thank them, or find out why. Because, people don't just send you money for nothing out of the blue. So just something to keep in mind. All right. Let's see. Vic says sold one share of National Bank, $113.78, but still charged $9.95. Oh my God. Oh, you see, this is why, folks. This is why I love commission-free banking. So Wealth National Bank, Desjardins, even I think Mogo. There's a few of them out there that have commission free. I would you shouldn't be paying this stuff if you can avoid it. Holy cow. All right. Oh, Vineet says it wasn't a car scam. Okay, well, whatever type of scam it was, the big thing is, just sort of to finish off that whole scam thing, is be vigilant. It never hurts to take too much precaution nowadays when it comes to avoiding scams. And what was the company called? So GS Partners. All right. Do you think Air Canada will bounce back hard? The PE ratio is so low, and it is near a 52-week low. So yeah, the whole thing with Air Canada is, in my opinion, anytime it's under $20 a share, it's a good deal. And right now they're pretty low. So I think it's a good buy. I think it's, you may need some patience, but I do think they'll definitely get above 20 again. I don't see them going much though higher than 25. So if you're looking at doing this as kind of just a short-term play, I personally, once it got back over 20, I would start looking at it at an exit point, because I see at least another year, maybe a little bit longer, before things start to turn around for Air Canada. Al says, what are the details of the scam? Let's see. Rogers charges $15 a day for roaming in the USA. Oh dear. Yeah, they do. It's actually funny. I'll tell you, when I used to work at Rogers, we used to get customers that would call in that didn't go to the US, but because they lived close to the border, sometimes their phones would connect with US towers and they'd get charged. Now, myself, anytime I got them, I wiped the charges out because I'm like, yeah. And then I would add an app. There's a little app you can add to your phone that prevents that from happening. So I would have them add that as well so it doesn't happen again. But yeah, it can be a pain. It can definitely be a pain. Let's see. No, it wasn't a free iPhone or anything like that. It was set up a brokerage overseas. Oh God. Oh my God, Vineet. So it was set up a brokerage overseas and deposit money via crypto. He thinks it's going to be 200K growth. Oh dear God. This does not sound, this sounds like a scam. Like, I mean, through and through. Here's the thing. I imagine you're trying to talk him out of it, but this is not good. This is absolutely not good. Oh God. Yeah. Yeah, no. Especially, I mean, here's the thing. A brokerage overseas, deposit money via crypto. This is a fast way to lose. However much it is that that they're asking for. Oh my God, I would not do this. There's nothing that would make me want to do this. Like quite literally, no. There's no way. Oh my God, that's actually worse than like, we just finished talking about a lot of scams where you're being tricked. I don't even think you're being tricked here. I think that it's just, to me, that's just a very obvious one. So oh my gosh. Yeah. And here's the thing. All you can do, Vineet, is you can try to educate your friend. But if they just want to do it, at some point, they're going to learn the hard way, unfortunately. Oh gosh. That's a bad one. Oh boy. Paul's in the house. Let's see. AC might take off. Part of the education to get him was somewhat correct, which lured him in. Okay. Let's see. Candace, you really did a 7-hour stream. Mad respect. How many bathroom breaks? Lunch. Amazingly, Vic, this is amazing. There was just the one break in the middle when I played a little bit of a video while I went and had a very quick bite to eat, used the bathroom, came back. But no bathroom breaks in the between at all. So yeah, but also keep in mind, I limited my beverages before the stream. So, I had coffee, but I wasn't going crazy with it. Okay. Kevin says, we are doomed. Oh dear. 9 says, that's why I don't use random exchanges. Yeah, absolutely. Unheard of exchange name should be a huge red flag. Absolutely. And this is the thing. If I was even remotely considering something of that nature, I would be taking the company name. I would be Googling it. I would be digging deep. I wouldn't even just Google the company name. I would Google the company name, put the word scam with it, see what type of stuff I get back. Get ChatGPT to do a search because, ChatGPT is pretty thorough. Boy. Jackie says, hello. 9 says, are you going to do a YouTube video on scams? I'm beginning to think I need to. Holy cow. Prairie says, thank you for the shout out. The open to close stream was fun. It was my first time on a stream outside of work. Nice. Well, you handled yourself well, Prairie. It was a pleasure. It was absolutely a pleasure. All right. Mogu now charges $15 a month. Really? Oh, I hate fees. I'm going to put it out there right now. Not a fan of being charged to use a service that they're going to make money off of me using. If there was no possible way for them to make money, then fine. Maybe I might be happy. I might be okay with it, but I don't like that. I don't like that. And that's one of the things, like I've already mentioned, like Moo. I will use them as an example. I'm going to poo on Moo right now. They reach out to me constantly. And they're like, we love your stuff. We want to sponsor you. And it's like, no, I am not going to sponsor somebody who is going to charge, commission trading. It's just not going to happen. I don't like their product. I like some of the flashiness. I like some of the GUI. Yes, I will give them that. But overall, they lost. They just lost me, and I'm not willing to compromise on that. And I know I do see a lot of YouTubers out there that are like, okay, let's do it. And that's fine. That's fine. I mean, everybody has to make their own line in the sand. My line is firm. I'm not moving it. So no Moo. And Moo, if you're watching, go away. I don't even want to talk to you. Goodbye. All right. Al says, let's see. Yeah, I like the multi-guest stream concept. It was cool to see the other people in live chat and Zoom. Yeah, absolutely. And that's the thing. I mean, going forward, we can, like, I can look, like, if any of you ever want to come on to, like, even this week, if you want to come on for a couple minutes or something, probably won't have you do the whole show. But if people want to come on, we can always look at, maybe what we could do is after the news segment, I could always drop the link every week. And if somebody does want to come on, then yeah, why not? I am okay with that. Kevin says, if it sounds too good to be true, it most likely is. That is the number one rule of avoiding scams. Absolutely. Vic says, after I sold broad of NA dividend resulted in a drip of 1 share, so I had to pay $9.95 to sell it. Yeah. Oh. See, English not good. I swing trade. Am I a swinger? Well, if you want to call yourself that, maybe call yourself that with context. Otherwise, people might think a little bit differently than you're thinking of. Alice saying your friend is extremely naive, Vineet. Yeah, I would agree. But at the same time, if they just haven't been educated on a lot of this type of stuff and it's all brand new to them, I can understand how people could get really, really caught up in it. And they're probably talking to somebody who's, trying to get them to do this. And they're probably saying, oh my God, don't listen to them. They're so wrong. So they're probably getting two different versions, the correct version from Vineet and then the scammer's version. So yeah, I mean, sometimes people do get caught in, and sometimes you got to look at it. When you're brand new to anything, you're going to be naive. You're going to be you're an easier target. I'm not saying you're an easy target, but you're an easier target than somebody who knows and has been into that area for a while. So I got to give them that amount of credit that, it does happen. It does happen. Vic says, telling people at work I am a swinger and getting weird looks. Yes, absolutely. Let's see. Greed blinds a lot of people. That is true. That can happen too. Well, that's one of the reasons why. Like, you take these Bitcoin scams, like when they come and they steal a YouTube channel and they put up a fake news conference, and then they say, and then like it's from Elon. He's like, I just want to give some of my money back, so send me a Bitcoin. I'll send you two. People, if they believe it's really Elon, and all of a sudden they have this the greed's thrown at them. For some people, they're like, oh my God, that's great. Yeah, Elon's giving away money. I'm going to take some. And that happens. People do, because if nobody falls for these things, they wouldn't be out there as prominently as they are. All right. Vinny says, thank you for your support. I can tell you understand how I feel. It's been a difficult few hours. Yeah. And you know what? You can only help them. You can give them the information. You can maybe even refer them to, where they can get more information. But at the end of the day, there's just not much more you can do after that. Patricia says, hi. Let's see. Sounds like a very well-planned social engineered scam. I too would encourage your friend to stay away. Yeah, absolutely. Absolutely. Isn't Moomoo offering 8.1% on uninvested cash in US? I don't know. I honestly don't know. Maybe, but even then, well, I mean, if they that wouldn't be a bad deal if they were giving you that, but I still, with their commission, with their fee structure, I might keep money uninvested if I was in their platform. Let's see, the Canadian trader. I got it. I got it. Which trading platform do you use? Right now, most of my stuff is on National Bank. So I use National Bank, and I also use Wealthsimple a little bit. But at the moment, I think most of my stuff is in National Bank. Vineet says Vineet. I saw the V. Kevin says I use Wealthsimple. Yeah, exactly. Mary says loved the live stream guests. They all did a great job. Absolutely, absolutely. And kind of one of the, I think everybody did fantastic, amazing. But a huge shout out to Larry. I thought Larry brought a lot to the table. He was a little shy at first, but once he got talking, holy banana bread, he really brought a perspective that I really, really appreciated having on the stream. The Canadian trader says, I don't mind fees, cost to do business, but only if it makes sense. Okay, and that's fair. That's fair enough. Now, I guess one of the things is that when you are paying a commission per trade, you need to plan things out a little bit more. You don't want to be nickel and diming. So you're not going to be in that situation where you're going to just I'll buy one share here, one share here, one share here, especially if you're getting hit like that $9.95 every single time. In a case like that, you're probably looking at being a little more strategic. So, for example, instead of buying, 4 separate shares over, let's say, over a month or so of your target, you'd probably save it all together and buy 4 at once. So you're only getting hit once. So that's certainly something to put into in mind. Plus, and here's another aspect as well. Some of them, I know Scotiabank's iTrade does this. Some of them will let you do basically ETF trades for free. So if you got that, then at that point you might then sort of be like thinking, maybe I want to be an ETF trader. So, or if you are much more into ETFs than regular stocks, that's not a bad option in that case if you have one of these other platforms. PMJ says I pay commission RBC direct investing $9.95 because I don't want to have too many accounts. I use RBC and EQ Bank. How many accounts do most folks have? Okay, that's fair enough. So I have EQ Bank as my main bank. And as I said before, National Bank, I do most of my trading in. I do have, of course, Wealthsimple as well. So now lately, I haven't had a lot in Wealthsimple. At one point, I had everything in Wealthsimple. But then as I started doing a lot more swing trading and day trading stuff, I just found that I found the interface at National Bank suited my style of trading better. And that was the deciding factor. That was my deciding factor. But I think for a lot of people, Wealthsimple is fine. So I think that's great. All right. Al says I have a zillion accounts. A zillion. Holy banana bread. But you should just move them all out of RBC. NBC has no fees. Same with Wealthsimple. So there we go. There's a couple of opinions there. I can't close my accounts. That's why I have too many of them. It's also the reason I have mutual funds and pay their 2.2% management fee. Yikes. The Canadian trader. I agree with the not wanting too many accounts and also pay after having tried a lower brokerage. Paying for convenience is sometimes okay by me at least. Exactly. I mean, and this is another thing too that you can look at too. You have to sort of look at your overall trading fees. So, for example, you could have an account that does charge a fee, a commission. You could have one that doesn't, but you still, they may not be as far apart as you think initially. because if the commission-free one has larger spreads, you could, you could be paying not, a little bit more than you think. It's just one of those things to sort of put down, just to sort of put into the decision-making process. Vic says, let's see, TD has had downtime, so has CIBC and RBC. So you might need different accounts, especially to get cash out quick. Some have limits, emergency like wildfire evacuation. Yeah. I mean, and there is, and we did have an article last week as well, as they move into some of these new systems, with the changes that will come to interact through them. We might be able to get to a point where you can move money a little bit faster and a little bit more. So I think that would be fantastic. Let's see. Well done reading my name. Okay. Well, I saw it and I'm like, I think that's where you're going. I think that's where you're going with it. So I took the chance. PMJ says, I don't do a lot of trades, only have ETFs. Then in that case, you're probably fine. And, in some places, like if you have, let's say, we'll use Scotiabank as an example. If you have everything, your mortgage at Scotiabank and everything, all of your finances, and you've been using Scotiabank your whole life, and you're mostly an ETF investor anyway, Scotiabank iTrade is probably fine for you. I mean, I think there's a minimum that you have to be able to set it up, but if you're in that position, you probably don't need to worry about that. Prairie says, I'm not going to be able to stay for a whole stream. This week is shaping up to be a week of firsts. My daughter and I are attending Pierre Poilievre's rally in Winnipeg this afternoon. Oh, there you go. That will be fun. I've never been to a political rally before, which is interesting. Very, very interesting. Now, the closest I think I've ever come in politics is I was a scrutineer once. And that wasn't even my choice. I used to work for a family. They were very conservative in nature. And back during the leadership race between, what was it? I think it was Kim Campbell and, oh my God, my mind was like going. I was about to say Brian Mulrooney, but Steve Harper. So between Harper and Campbell, I went to work one day and my boss said, threw me a card and said, you're now a card carrying conservative, and you're going to be a scrutineer today. I'm like, oh, am I still getting paid? He said, yes. I said, okay. So I went there and pretty much, oh boy, being a scrutineer, very boring. You're just looking at ballots. And if there's something wrong with the ballot, you're like, yeah, that one, I have a problem with that one. And then everyone, the other scrutineers will look and say, yeah, okay, yeah. Or, you might argue a little bit about it. But yeah, it was fun. I was getting paid, so I didn't mind. Let's see. Excellent advice. Much appreciated. Get out of mutual funds. I'm not a big fan of mutual funds. Let's see. You need to lump sum in a fee brokerage. You do. 100%. Avalash, do you feel BNS will overtake its competitor in the bull market? It's only one that is about 30% below peak in the past 52 weeks. I am pretty bullish on Scotiabank. I think they have the potential to do really well as they move into a bull market. But I think you have to be patient with all the banks, because we still have that mortgage wave that's coming. And I know that something broke the other day as well about the CRA has been pumping money into the banks, giving them loans just to help with all of that money. And the fact that they've been putting away a lot of money, and now they're also taking loans from the CRA, is kind of it makes me think that this mortgage wave is perhaps a little worse than what they are thinking it is, if they're in that state. So we'll definitely have to keep our eyes on what's happening with the banks. I do think long-term, they're going to be fine. And I do think, especially if we start to get more rate cuts. And we're going to talk about that when we get into the news. Holy cow, we haven't even started the news yet. What's going on? Let's see. I can't. Okay. Let's see. Yeah, I think your trading pattern is important. I hold ETFs and maybe only do 4 to 6 trades per year. Okay, that's not too shabby. All right. Well, hopefully you can get out sooner than later. Let's see. I don't live in Canada. You can't buy if you are a non-resident. All right. Oh, I'm almost caught up. We can get to the news, that means. I tried to about 20 years ago and found out that I couldn't get them out. All right. Fund managers are parasites. Yikes. Those are harsh words. Harsh words, Kevin. I bought those MFS long time ago. The internet didn't exist back then. All right. Oh boy, we can finally get to our first story. So, the cutting has continued, as we all know. The Bank of Canada, they have come out and they have cut, of course, on this week, the interest rate down to 4.5%. So, we're getting down there. We're getting down there. So, they did say that they are expecting core inflation basically to slow to 2.5% by the end of 2024 and finally reach that 2% target next year in 2025. So they're very optimistic about it. I like that. I do like that. I hope that's the case. Now, economists are actually beginning to think that we're going to get possibly 2 more rate cuts in Canada before the end of the year. So that could be interesting. And I know I've been adamant saying we're not going to get July and September, but now they're starting to think September. Ah, it's like every time I say no, we shouldn't have one in September. They go or in whatever month it is, they go and do it anyway. So who knows? We could see another one in September. And, it's going to be interesting. Now, as of course, a response. So a lot of people are like, okay, well, how does this impact me directly? So when these rate cuts cut, it means that the banks will also cut their prime lending rate. And so that is now down to 6.7%. So that is going to offer, well, people who are on variable mortgages, they'll see those mortgages come down right away, provided you're not in a variable fixed. In that case, you're not going to see it because the way variable fixed works is that as the rates come down, you're still paying the same, but more of what you're paying is going to the principal opposed to interest because the interest amount is shrinking in that case. And that's not a bad thing. That's not a bad thing at all. But, we should start seeing a little bit of this starting to pop up and it's going to start helping. I think it's going to start, especially if we get one in September as well, then I think we'll have a very strong year for the end of the year, especially for REITs, because I've been sort of expecting them to benefit big time from this as we move along. So that's not too shabby, not too shabby at all. Now, in conjunction with this story, kind of the first 2 stories work together. We've also had that US PCE, so personal consumer expenditure report. Now, this one is the one that the Fed down in the States, they love this report. This is one of their favorite indicators of inflation. So this is what's really cool about this report. So they were expecting it to come in at 0.1%, and it did. It came in at exactly 0.1%. They're expecting the PCE core to come in at 0.2%, and it came in at 0.2%. So they got exactly what they were expecting. No surprises. What is nice, though, is even though there were no surprises overall, the PCE slowed from 2.6% to 2.5% between last month and between May and June. So this is good. This is actually really, really good. It shows that inflation is coming down. And the market liked this report. As you can see, if you guys were watching the market yesterday, we had a nice green day right across the board. A lot of it was this report. This report really made people a little bit happy, which is fantastic. So one of the good things about this report is it almost guarantees a September rate cut in the U.S. And if Canada's planning another rate cut in September, that will allay a lot of fears. People who are thinking that we're moving too far away from the U.S. when it comes to rate cuts. So that would be good. If the U.S. cuts, that will really, really help people feel a little bit better. Now, there is still one kind of stumbling block in the way for the U.S. rate cut. And that is there's a lot of labor market data that's going to be dropping next week. And that will give us a pretty good look at the health of the U.S. employment picture. And right now, we're expecting the July job gains to tally around 180,000 in the U.S. and their unemployment rate to stay at around 4.1%. So as long as we don't get too hot compared to those numbers, that rate cut, I think, is pretty much in the book. So it's definitely not too shabby for sure. All right. Let's see here. All right. So let's see. I probably paid 40K in fees. Oh, it's one of these scary statistics. I would hate to know how much I have paid in fees my entire life. That would be a number that would probably scare me. So they're weasels. Okay. Right up there with car salesmen. Oh, fun. I see. Honestly, I get why they do it, but I really doesn't seem fair. Like so many people hold MFS, so mutual funds in Canada, and so many don't know they are getting ripped off. No, exactly. Well, here's the thing, especially older people, because mutual funds used to be the only sort of mixed basket game until ETFs came along. So ETFs are not, they haven't been here forever. They are relatively new instrument. I believe, I think it was the 80s that the first ETF started to pop up. But they've become a lot more popular. In fact, we have a new story on ETFs coming up. Not yet, but coming up. Let's see. They're making money and there's ripping innocent people off. Yeah, I hear you. Let's see. Why would they take all and have you out in the streets if you could fall for it? All right. Let's see. US has many mutual funds too, but their fees are super cheap. Like FXAIX is a mutual fund that tracks the S&P 500, but with only a 0.015% fee. Canada doesn't have cheap mutual funds. Yeah, I mean, you will find a range. I know the US tends to have cheaper mutual funds than Canada. So, there are some mutual funds that don't have huge fees, but you are still limited to the fact that with a mutual fund, its price doesn't change at all during the day. And, you have that one opportunity, basically the close of the market, where you can buy, sell, and, do what you need to because that's when the price all gets updated. So, you don't have a lot of freedom. You don't have a lot of freedom with them. All right. The system needs to have a total overhaul. Not a recall, an overhaul. Let's see. States get you on volume. We get shafted up here in Canada. All right. Let's see. And all the brokers in the US have zero fees to trade. Yeah, this is a big one here. So 30-year mortgages in the US, we need longer mortgages in Canada for sure. Because that's why they don't have the same issue in the US with a mortgage wave coming, because people during the pandemic, they were able to lock in these really low rates for 30 years. Unfortunately, that's not the way it was in Canada. And that's why, we now have a lot of trouble coming our way, of course. Let's see. Sad to hear Moo charging fees. How long until Wealthsimple starts charging fees? Here's the thing. Wealthsimple does charge fees for some services, but I don't think we would see it. Because that's kind of like the core of their identity, is that they don't have that they're commission free. So I don't see them backing out of that. They make plenty of money through their spread and their buying habits. So I don't think there's ever going to be a need. I don't think they will. I think if anything, and this is one of the things that surprised me. So when National Bank went to commission free, I kind of thought some other banks might follow suit, but they haven't. But I think in the future, commission free will be more the norm. I do think that. How long in the future? Oh God, I don't know how long it will take. Probably won't happen until the other side of the mortgage wave at the very earliest. And even then, we could be talking 10 years out type thing. All right. Let's get to our next story. We'll get that out of the way. All right. So Canada's auto supply. So amazingly, we are no longer in a auto shortage. So we have a lot more, both new cars and used cars. We're in basically we got a surge in our supply, which is fantastic. So used car prices in response to the surge have been dropping. So right now, according to Auto Trader, there's been a 8% drop. And but keep in mind, and this is the funny thing. So we have an 8% drop in the price, but their stock is up 28%. So just to give you an idea, yeah, that's kind of cool. Now, if you like a nice car, so if you're into the luxury car, so luxury used vehicles, they're seeing even bigger drops. So 10% from last year's levels. So that's your used cars. What's going on with the new cars? Yeah, nothing. The prices are staying steady. So right now, the average new car is still coming in at $66,807, even though, and this number will boggle your mind, their stock has increased by 70%. So it's kind of interesting. I mean, ultimately, I think at this point, new and used vehicle prices, I think they're pretty unlikely to return to where they used to be at pre-pandemic levels. Well, everything from inflation and everything else. But yeah, also, I think at least for the rest of this year, I don't think we're going to see much more dropping. I think it's going to remain pretty steady. We'll look at it, see what happens next year. But if you're looking for a cheaper car, you're probably there at that point, especially if a used car. Also, keep in mind too, as the interest rates come down on credit cards and on credit and things like that, you can probably get a better deal on a car loan. So, you're in good shape. But once again, I will put this out here. If your current car completely suits your needs, don't get a new one. Why add extra money? If you don't have to. So I know people that will do that. It's kind of like it's usually those same people who have to get a new phone every year. So yeah, if your phone meets your needs, don't get a new phone. If your car meets your needs, don't get a new car. Simple as that. All right. Okay, let's see here. You guys are just not dropping the fees. You're just going on and on. Let's see. They start charging fees. I liquidate all I have with them and pull the plug on the outfit. Oh, with Wealthsimple. Yeah, I don't think that's a danger with Wealthsimple, to be honest, Kevin. Let's see. The first ETF ever was launched in Canada in 1990. The first ETF in the US didn't launch until 1993. Okay, there we go. Yeah, I was thinking late 80s. But yeah, 1990, that makes about sense. I know that Vanguard had some of the first out there as well, so that's kind of cool. Al says, yeah, they better not. They would lose all their business to National Bank. Yeah, absolutely. All right, Prairie, enjoy the rally. Holy cow. That's kind of cool. So Prairie's going off to see Pierre Polyev talk in Winnipeg. So pretty cool. Let's see. Al says, yeah, but in 1993, there was no internet, so the average Joe like me didn't know about ETFs. That makes sense. That makes absolute sense. Yeah, it's kind of, holy cow. In the old days, people were trading with, stock certificates. It's kind of funny. Let's see. Enjoy, have fun, and lose your voice. Jonathan says, I just thought it was cool. The first ETF was in Canada. That is pretty cool. Well, hey, the first spot Bitcoin ETF was in, well, I don't know if Canada was first in the world, but we beat the States. I do know that. Let's see. Al says, I bought my first mutual fund in 1995. I left Canada in 1999. There was internet, but it was dial-up and no Yahoo Finance or Google. It was different investing back then. You had to be super rich to get. The second part here. Agents to buy and sell and research for you back then. Yikes. Yeah, fun. Ian says, I used to be able to find a decent car for $2,500. Nothing flashy, but reliable. Not anymore. 2,500. You can probably get a nice bicycle. You can probably get a good bike for that. Oh dear. Oops, we already did that one. Michael says, what do you think on EW, then LW, then CAG, which with food inflation has gone down with DIN, PZZA, CBRL sectors could work? Ah, boy. This is a doozy of a question. A doozy of a question. All right, let's park this question, Michael, after the news, because I really, to answer this, I kind of need to pull up stuff, and I don't have that sort of set up until after the news. So circle around once we're finished the news. Circle back with this if you don't mind. Let's see. Al says, and if I remember correctly, stock trades costed $50 each year back then. Oh boy, that's a lot. That's a lot. But I mean, if you're actually using if you're paper trading with an agent, there's definitely going to be a lot more commissions and charges in there. And just the overall difficulty, you're not going to be making a bunch of little trades, that's for sure. Let's see. A Vancouver Isle guy says, I don't either. I'm just saying there's a reason I'm with Wealthsimple, and it's the no fees. Yeah, makes sense. All right. Whoops. All right. Canada, now known for hockey, basketball, bacon, and first exchange traded funds. There we go. There we go. Okay. Now, let's get to that next story here before we get to our next question. All right. ETFs sales rising. That's what we were talking about. So in June, ETFs have hit brand new all-time highs. And I've touched on this before because the sales on ETFs have just been getting really big in Canada. So sales of ETFs were just under 10.1 billion in June, with net sales gains in every category, and bond funds collecting just over half the total. So bond ETFs have been doing really, really well. So investors spent about 1.2 billion on bond mutual funds, even as overall mutual fund sales saw net redemptions for the third month in a row. So we're talking 1.9 billion in redemptions. So people are moving out of mutual funds. That is good. Other than some of the bond ones. Now for ETFs, BMO's aggregate bond index ETF. So that is ZAG. If any of you familiar with that. They've got a 3.506% yield, but they actually saw inflows of over 2 billion in the first half of this year. So that's nearly 30% of their total assets under management. So why are people pouring into bonds? Well, bonds tend to have an inverse relationship with interest rates. So when interest rates come down, bonds go up. And that's why people are getting in, because they're seeing, okay, we're at the beginning of a rate cutting cycle. Let's ride the wave using some bonds. And that's what they're doing. That's why that's why ZAG is doing really well. And it's not a bad strategy, not a bad strategy at all. Now, total ETF sales for the first half of 2024, they came in at 32.6 billion. So and this is kind of huge. That's an 80% increase over the first half of 2023. So they're taking off big time. So on a net basis, investors sold off 3.1 billion in mutual funds in that same time period. So mutual funds shrinking, ETFs growing. It's huge. Since January, equity ETFs have made up roughly 2/3 of all sales at around 19 billion. And here's our I mentioned Vanguard earlier. So the Vanguard S&P 500 index fund, so our good old friend VFV, they actually had inflows of $2.9 billion in the first half of this year. So they're just doing fantastic. I love it. I love it. All right. Michael says, are you going to stream which can help each other, which going at which you talking about ETF, which looking at EWZ, which Braille ETF, which your downside if around 27 and upside around 30? Okay. Let me see here. You're going to Steam. Okay, I actually read that as stream, but Steam, okay. Which can help each other in doing what you're talking about, ETF or looking at. So once again, yeah, bring up a few of these, Michael, once I've finished the news so that I can actually pull things up to sort of try to piece together here what you're asking, because I'm not 100% sure, to be honest. But yeah, we'll get back. We'll get back to that. Let's see here. A&W, M&M spiked last week. I missed out on getting in on these stocks. Yes, because A&W, the royalty, and their other A&W company, they kind of merged, and that was huge for A&W. Huge. Let's see. Harvest is increasing dividends from its ETFs. Oh, that's nice. Let's see. What does A&W trade under? Well, it used to be aw.un, but we'll take a look. We'll look at this. Once we're through the news, let's look into that A&W. I think that would be kind of fun. Oops, right here. Let's see here. I just Perplexity AI and saw Yum sold off, and W in 2011. I thought it was Yum because where I live, there are a lot of A and WKFC combo stores. All right. So, okay, EWZ is a Brazil ETF. Interesting. That is interesting. All right, let me get to that next story. We're slowly getting through the news. We're slowly getting through. So the Loblaws boycott. So one of the things, when I was doing the last deep dive on Loblaws, we were talking a little bit about how we wouldn't really hear about, whether or not that had an impact on their overall sales until the next quarter. And well, their new earnings report has come out. So that soft boycott of Loblaws that happened back in May. According to the CEO of Loblaws, he said that it had very minor impacts on their earnings. So he said it really wasn't a factor, though he did admit that in some stores in specific markets, so probably stores like in bigger cities like Toronto, he said there was a little bit more of an impact, but really still not anything to really hurt their numbers. Now, with their new earnings, just to sort of give you an idea, they did exceed their expectations in earnings. So they came in at an EPS of 215 opposed to 214, which was the estimate. Their revenue, though, did, however, fall. So they were short. They recorded 13.95 billion compared to the 14.17 billion estimate. So, they definitely got hurt a little bit. I don't know if it was so much the boycott. That's the whole thing. Now, according to them in the earnings call, they said that discrepancy in their earnings was simply because they had a huge Q2 last year, and they said they were expecting this number to be lower as a result because they knew they weren't going to compete with last year's. Now, they also, and this is kind of another thing too, you probably heard the news where they have agreed to pay a 500 million settlement on that whole bread fixing lawsuit. So that's going to be big, but that does not come into this quarter. That will show up in a later quarter. Probably their next report, you'll have any impact that has will certainly show up there, but not here. Not here at all. All right, quickly just jump to the next one. We'll get we're almost through the news. OpenAI. So Sam Altman, famously of OpenAI, he backed a study on universal basic income. So the study was one of the largest and most comprehensive of its kind. They examined the impact of guaranteed income on the recipient's health, spending, employment, ability to relocate, and other facets of their lives. So they did this in the U.S. South. They had 3,000 participants who were given basically $1,000 a month. That's USD, of course, for 3 years. So basically, it worked out to a 40% boost in their income because these were all of the people selected for the study were all lower income people who made less than $29,000 a year. So some of the basic income recipients spent more money. The study found that with their extra dollars going towards essentials like rent, transportation, and food. They also studied the free money's effect on how many recipients worked and in what type of jobs. They found that recipients of the cash transfers, they worked 1.3 to 1.4 hours less each week compared with the control group, and they used that extra time off for leisure activities, which you could argue improved their health situation a little bit, or at least their mental sanity a little bit for sure. So instead of working, there was one huge downside to this project. They began it in 2020. So in the middle of this pilot project was, of course, the pandemic. And in my opinion, I think that throws a lot of these results and makes them probably not as relevant. If anything, I would say they probably should have, or maybe consider doing it again. So one of the things they said is that people didn't find new jobs like they had anticipated. But keep in mind, a lot of those people were locked down for a while, and finding new jobs in the middle of a pandemic, not the easiest thing. So, it's hard to say. And I think it's also where you did it as well. I think if you did it more northern, um, I think you would probably have some really interesting results. I know they did do a small study in Ontario, and then Doug Ford came in and he canned the study. But a lot of the people on that one, um, a lot of them were actually, starting to enroll in education and things to better themselves so that they could get better jobs on the other side of it. So we did see better results, I think, from the Canada one. But it's happening. And I think the reason Sam Altman is looking into it, or at least backed the project, is that they're sort of thinking about long term and what the effects of AI are going to be on everything else, and how jobs are going to basically start disappearing. All of that fun thing. All right. Zashif says, will Tesla further drop on Monday? Oh, I think they've dropped about 10% since their earnings report. Will they drop further on Monday? I don't know. I honestly don't know, but I don't think they're going to drop much further. I feel like most of the drop has happened. So if they do drop, I don't think it will be much. So I think we're going to start to see them flatten out a little bit. I sent you an email. Did you see it? No, I'm in the middle of a stream. I tend not to check my email when I'm streaming, but I will look at it after the stream. Let's see. Klaus Schwab WEF protocol. We will own nothing and be happy. Oh, the Great Reset. Okay. All right. Educate yourselves. All that fun stuff. See, I'm a proud tinfoil hat wearer. I own many shapes and sizes. Vic says, can you cover closed funds like PSUS? I can. I know I have in the past touched on some closed funds. But yeah, that is one that we could certainly take a look at. All right, let me get through the last part of news, because then we can actually pull things up. And I like that too. All right. Our final story. We had a shrinkflation report come out. So 20% of the products the study looked at have shrunk over the last 5 years. In fact, some items had 25% less than they did in 2019. So you're paying pretty much the same price for less product. That's what's been happening. So the worst levels of shrinkflation were found in poultry, cooking oils, processed meat, baby food, and products with high fat and sugar content. So pretty much sweets and things like that. Now it is, and this is the sad part, it is expected to get worse, because as people are complaining about high prices, a lot of these providers of different products are thinking, shrinkflation might be a way to to make the customer think they're paying a little less, because you could cut the amount of product by 10% and then cut the price by 5%. So you're actually making more money. But that is kind of one of the things that's happening out there. So interestingly enough, there are some countries in the world, South Korea, Hungary, and Brazil actually, that require shrinkflation to be labeled. So if something shrinks in size, they have to actually put a label on the can or on the bag or the packaging, just to let you know that they have shrunk. So holy banana bread. All right, we got one story in Crypto Corner. We're just going to fly through this, guys. I'll catch up with the chat here in a moment. Ethereum, spot, US Ethereum spot, Bitcoin, spot Ethereum ETFs have hit the market. So we have two big ones. So the U.S. So there's the BlackRock down there in the U.S. ETHA. So ETHA, and Bitwise has ETHW. So ETHW. Now they both. Well, ETHA. So ETHA started at 26.59. It did close the week at 24.85. ETHW started at $25 and it closed at 23.53. Now, there's been a lot of sell-off. There's been a lot of sell-off on some of the Ethereum down there, especially from, I think it's Grayscale that did a lot, sold a lot off. So there has been a downward pressure on Ethereum. So we need these to sort of stabilize, and they'll be fine. These will be fine once we get to the other side. Of course, up here in Canada, we got Ethi. That's your one if you want income, and there's a few other Ethereum, Ethereum. I want to call it Ethereum Bitcoin, Ethereum spot ETFs. I'm so used to talking about Bitcoin. All the fun. So coming up next week on our calendar, on July 31st, we actually have our month-over-month GDP report that's coming out. So it'll give us a little idea. It's not a quarter one. It's just a month-over-month. And in the U.S., the big report everyone's waiting for is that all that jobs data. It's the big chunk of it's dropping Friday. So that will be fun. This week, we got a lot of interesting earnings calls coming out. Up here in Canada, some of the key ones, Enbridge, CP, CP Kansas City, CNQ, Routers, TC Energy, Synovus, Bell, TELUS, Fortis, Torlamine. In the US, we got more of the tech. A lot of the tech are breaking out next week. We got Apple, Microsoft, Amazon, Meta, Intel, AMD, and Qualcomm, just to sort of name a few. So definitely going to be an interesting week for earnings. And if we don't get great earnings on these US tech companies, that could have an impact on the market. So that'll be something definitely to watch as we move through the week. All right. That's it. We did it. We did it. Now it means I can get rid of this. I can go here. Now I have access to the other screen. So, and you were looking at PSUS, Vic. Let's take a gander at that. Where is my screen? It's right here. Oh, let's pull over to here. Let's go. Really? All right, I'm just going to reload this page. For whatever reason, it's not coming in. All right, there we go. Ooh. We'll just get a fresh copy. All right, so you were talking about PSUS. Of course, I don't have it. There's PSU, but PSUS. Not seeing it. I'm not seeing it, Vic. If you know what their full name is, let me know. I might be able to find it that way. Let's see. Everyone disregards everything that's in the open now. We are doomed. See, honestly, this channel has the most interesting news stories. You know what? I go through it. I try to find. I like to find the important ones, but I like to balance them with ones that nobody's even thinking about. So I try to do a balance that way. All right. Could you ever do a comparison of T? So TELUS, comparison like what to TELUS versus Bell versus. I actually did that once, Mary. I did a video on TELUS versus Bell back when I used to, like, not this year, but the previous year, I tried this concept on the channel where we would do battles. So we would choose a couple of companies, and they, for the most part, really underperformed. Nobody was really interested. So I ended up pivoting off of them just back to straight deep dives. But one of them we actually did a TELUS versus Bell versus Rogers. So there were a couple of battles that were fairly popular. That one did okay. I think the one that really did well was I did a Brookfield Corporation versus Brookfield Asset Management. That one I think did the best out of all of the battles. But yeah, I wouldn't mind doing another comparison of and we'll figure out how to do that. But yeah, that's on my radar. It is on my radar for sure. YUMC is the China KFC. but I saw a report Pizza Hut files for bankruptcy in the US. Oh, really? I have not heard anything about Pizza Hut filing for bankruptcy. I don't even know if I can see some of these. Let's just take a look here and see if I can see YUMC. There's YUM. Here we are. YUMC right here. So here's Yum. So Yum China Holdings. All right. Let's take a gander. I'm kind of curious here to see how they have done. Kind of like other Chinese stocks. I know Chinese stocks like Alibaba, and a few other like that. They haven't been doing the best. Honestly, China is not a market that I've been super interested in, only because with a lot of people moving things from China to India, I just don't feel that that's a hot market right now. Where India, I think, is a huge market. I think it's doing really well. So I am absolutely, yeah. This one, Yumcy is not that yummy to me, but maybe this will turn around somewhere down the road. But right now they have a tiny yield, but this does not excite me. It does not excite me. Let's see. Vic says shrinkflation in a load of bread is terrible. Oh, yeah, I can believe it. Well, yeah, I mean, I remember bread lasting for a long time when I was younger, and now not so much. Not so much. Oh my God, how would they write a shrink label? That would be an interesting thing too. How would you do it? And they'd probably make the label very small if they were forced to. But I think it's just a nice thing to sort of say, content has changed or something to that effect. Because sometimes people don't know. Sometimes you'll come out, like you'll watch and something will come out and it'll have this nice new can that looks really nice and sniffy. But in making a really spiffy looking can, you'll find that they may have bent it in places, and all of a sudden you're getting less fluid ounces than you were before. Exactly. Now with 10% less. That works. That works. Yeah. Now with 10% less. Let's see. Bill Ackman delaying PSUS IPO. Oh, it hasn't come out yet. That's probably why. Okay. All right. I understand. I understand. All right. Mary says, could you do a comparison of a bank mutual fund and an ETF? I did do a video on banks, not banks, but on mutual funds versus ETFs. But I can look into that. And see if that's something I can do. Yeah, it could be interesting. All right. Just remind me again in the future in case I forget. So let's see. My favorite channel on YouTube, just wish it was 24/7. Yeah. You gotta, gosh, it's one of those things. Like, I know when I was coming up with doing that 7-hour stream, somebody was like, do a 24. I'm like, what would I talk about in the middle of the night? Well, we could always pull out the tinfoil hats and we could have a conspiracy talk hour or something at 3 in the morning. I don't know. I really don't know. Okay. Well, yeah, I wanted you to remind me later, not perhaps right now, but yeah, it is something I think would be a good idea. I think it would be fun. Al says, I saw Pizza Hut is bringing back all-you-can-eat buffet. I used to love those when I was in school. Oh, boy. Yeah. But, I mean, Pizza Hut, their crusts, if I remember correctly, are really thick. So I think that kind of limits how much you can eat. But then again, there are some of those people, there's like some of those competitive eating people on the internet that can probably polish off a lot. So that's one of those ones where you see one of them pulling up, you gotta like, maybe fake a fire alarm or something to get people out. Yeah, shrinkflation now in a more compact size. I like it. Hard to find a Pizza Hut to sit down at. I don't even know the last time I saw a Pizza Hut. I know we have some, but I just don't recall seeing one in a while. Let's see. Yeah, they mostly are just a pickup counter store now. And a lot of stores are moving that way. A lot of stores are moving away from the restaurant model and, going either to a straight drive-through or just a walk in, grab your food and leave type thing. So that is a trend. Let's see, went to one in the US. Okay. Easy to spot restaurants with funny shapes. Yeah, I can imagine. I can imagine. Holy banana bread. Whew. That's one of those things. What can I say? All right. We got a good week coming up, actually. Let's go over here to the Discord. All right. I need to go to the YouTube schedule. Oh, look at this. I have not updated this in a bit. I actually have to put all the new stuff up because I try to like keep it a little bit ahead of the game. There we go. I'll remove this too because, there we go. So we got the channel members choice video coming out for Tuesday. I have filmed it already. So the channel members have asked for a small cap. So small cap potential stocks. So we got small cap stocks coming out. So total return stocks. I found 5 I really like. That is coming out, of course, on Tuesday. Tomorrow I will edit it and it'll be up for the channel members. And then, this is fantastic. We have a 0 to 100K TFSA challenge video coming out on August 2nd. So Friday. So that will be awesome. We do, of course, have a market close on Wednesday, and I'll give you guys a chance on Wednesday to earn one for Friday. I didn't throw one up for Monday, only because I just finished a 7-hour, and the video, like the editing that I'm doing tomorrow, was supposed to be done today because the stuff I had to do on Friday. So the stuff for this stream, I had to do that yesterday. So everything got kind of put at askew, but everything will be back to normal after I get caught up on Monday. So Monday is a catch-up day. A catch-up day for sure. But yeah, we'll have the opportunity to do another Friday as well. I do like the Fridays. And every so often as well. You guys kind of got a taste of what a market open would look like. We'll give you an opportunity for a market open. Not this week, but next week. Next week we'll do an opportunity for that because I think that was good. I think that was good. All right. Let me just hit return. Otherwise, it stays in an edit mode. All right. That's what's coming up. All right. Now, Michael wants to know about NWL. That's a good question. I do not know, but let's see if we can find out here. All right. NWL. All right. So Newell Brands. Let's add them to the list here. All right. Let's pull them up. And holy banana bread. It looks like yes, but give me a second here. I'm going to shrink things down a little bit so that they make a little more sense. There we go. So yes, you can see right here, I can tell before I even look at the data, they definitely exceeded expectations. Ooh, interesting. Only on earnings. So earnings, they had an estimate of 0.214. They came in at 0.36. So that's a 68.50% surprise. I mean, that's fantastic. They absolutely blew their earnings out of the water. Revenue-wise, not so much. They were expected to get 2.047 billion. They got 2.033 billion. But that's not that bad, though. It's only a 0.68% drop in revenue. But on those earnings alone, so on their EPS, yeah, that was enough to drive them up. So you can see they were at 643. Boom. Earnings came out. They went up to 868 in the first hour, but they made it as high as 895. So yeah, they did it. That was their earnings. Kind of cool. That's one of the reasons, guys, like even the non-paid version of TradingView, you can go in and you'll get these little E's, and that's all you got to do. Go in, click on it, and it will show you all of that nice and easy. It's one of the reasons I really love TradingView. It's just fantastic that way. You can do that with, and I think TradingView as well, like probably companies that I wouldn't find on some of the regular traditional ones. I can probably find a lot more here because it does have support for a lot of different things. A lot of different countries, a lot of different markets, all of that fun stuff. So yeah, it is pretty awesome. I do like it. All right, guys, if you got questions, start feeding them into me. Otherwise, we'll have to call it. I don't want to call it, but if you guys don't have questions, let's see here. Do you pay for the upgraded version of TradingView? I do. I do. A couple of reasons. So one, if you'll notice here, the only thing that has a D here is this one right here, and that's the NASDAQ. I want pretty much up to the minute or up to the second prices. So these all change instantly, so I don't have any kind of a delay. So when you look at a price and let's say, well, simple, you'll see the 15-minute delay on it. So because of the trading that I do not need to see that delay. I want to know the exact price. Now, you can, I pay probably a little bit more. I have a little bit more so that I can do a little bit more when it comes to some of my indicators and how many things I can put on the screen. I do have a little bit. Yes, unless you have, my understanding is once you get Pro, so if you have 100,000 or more, or if you're paying that $10 a month, with the Pro, you don't have the delay. So that's part of one of the benefits of that. But if you have the basic one, then you have the delay. And in National Bank, so I'll show you. Let me show you. Do I still have? Let's see if I still have a page open. Yeah, I have I have this here. It's not gonna. All right, give me a second. I'm gonna log back in, so I should be able to show you what I can definitely show you what I'm trying to show you. All right, come on, let me back in. Here we go. All right, and I'll actually do this with the. We'll use the US account here. So the US TFSA from the 0 to 100K. So when during a normal day, when I look at it here, the market prices I see, these will all have a 15-minute delay in National Bank. However, if I come over here and I click, for example, to buy or sell, so let's say I wanted to sell this, so you can see it's showing 1728. When I click here to sell, you'll see in this case here, I got from 1573 to 1781, but this here will be real time, the bid ask, as well as the price inside of here. So you only see that 15-minute delay on the outside. So that I'm not worried. So when I'm trading, for example, I will usually have over here so I can see the real prices. And then I'll usually bring this up. And then all I have to do is just refresh. And it will refresh these every time I hit refresh. It gives me a new updated price for that exact second. And then I use that data for that purpose. And also, I mean, there's nothing wrong without using limit prices, stop losses, all of that fun stuff, because then you don't even have to watch. You can just let it do its job for you. So anyway, that's just one of those things. So it really comes down to that. In my case here with TradingView, I mean, I use TradingView a lot, a crazy amount. So, I don't mind. I don't mind. It's, it works out to, I think it works out to like $200 a year that I'm paying, but it's been worth it. It's been worth it. All right. All right. So NBC has a delay. Like I said, only on that front page. Anytime you click up buy, sell, that box that pops up is up to date completely. So you don't have to worry about it too much. The Canadian trader says, I've been wanting to start a TD ETF and have narrowed it down to a handful. Could you please share your thoughts on which one you might sway towards? Oh boy. All right. Let's pull them up. Let's pull them up and take a look. Ba-dum-bum-bum. All right, we'll head over to here. All right. Where am I going? I'm not going there. I'm going all the way over here. Okay, let's look at our first one here. All right, so you're looking at, all right, TDB. All right, so TDB, here it is. So it's one of your bond, and interesting. So this is kind of neat because you can sort of see as we've already started to get some of our rates cuts coming in. If you look at the last 6 months, you can see that we are starting to move up, and that makes sense. Yeah, interestingly enough, I have a feel. I was just wondering if this was like a rate cut here, and then a rate cut here, kind of like peeking at it. But I do think this one is going to do well on your way up, and you are getting a little bit of a yield, so 4.167. So yeah, I think this is a smart bet. I think it's a smart bet. But let's take a look at your other ones. You have TPRF. TPRF. So this is your TD Active Preferred Shares ETF. Okay. Let's take a gander. We'll just look at the last 6 months. All right. Now, this one has a much clearer move to the upside. Their distribution is about the same. Now, obviously, they're owning, let's see here, preferred shares. Let's see. So they're listing basically your preferred shares. They're basically investing in them. So when you think about split core, that's going to be the preferred shares on that side. That's what they're investing in. That's going to be that could be some steady growth, especially in a stronger bull market. So both TBD and TPRF, to me, those are both very situational. So like, for example, when the markets change, or let's say interest rates start going back up again, you probably don't want to be in TDB at that point. So that's kind of interesting. Now, T-Grow, I know that should be a growth one. So T-Grow. So here we go, the TD Growth ETF portfolio. So this one should have smaller dividends. And you'll see here, 2.124%. And we'll go the 1 year for this one. And you can see, if the market's doing well, this is going to be one that's going to do fantastic. So you're going to get more of your growth on this one from the value. So you'll have a high total return. And I think this will probably beat the other ones, to be honest, the other first two. But, you're going to get most of that in share value. So, if you want it in your hands, you're going to have to sell some. But to me, that's not too shabby at all. Okay. And finally, TTP. Okay, TTP, here we go. So this is the Canadian Equity Index. All right, I like the sounds of it. I don't think it's going to beat growth, though. I don't think. And you can sort of see it. I mean, it's moving in the right direction. It's not a nice sustained growth that you're getting out of T-Grow. And its dividends are about the same, so down in the 2.7. So yeah, in this case here, of the ones, if I had to choose one out of all of these, I probably would be looking at T-Grow, to be honest. I think it's going to have the higher total return. And that, to me, is big, kind of my focus. Now, not to say I couldn't have multiple. If I had to look at something else, the TPRF, I might consider them for as long as the markets are really strong and as long as split cores are doing well. I might consider it. But I do like T-Grow. Let's see here. What are your thoughts on CD banks at the moment and companies like EQB, PRL, and GSY? Hi, kitty. I don't know if you guys heard with the kitten. She meowed. I don't know. Oh, she's waking up. She was sleeping down in the corner. So that was her. I just woke up. All right. So at the moment, when it comes to Canadian banks, I mean, I like them while they're down. I think right now that's fantastic. It is a good opportunity to really, get some blue chip at a half decent price. And those, as long as you're looking at it on a longer term, you have no worries. You have no worries at all. If you're looking for shorter turnarounds, then you're probably not in the right, the right area because, there's a lot of, there's all of the mortgages coming at us. There's going to be a bit more pain, but I don't see us going much lower. So that's fantastic. Now, when it comes to EQB, so EQB has been just doing fantastic. And let me pull it up here. So EQB. Now, one of the reasons, of course, and I just actually did a deep dive on it. So if you want to check that out, you certainly can. Well, let's just take a look at the 6 months. You can sort of see, they have made that turnaround right now. They're doing good. They don't have as big of a mortgage wave. So the mortgages that they have are not actually EQ Bank's mortgages. They belong to Equity Bank, which is the sort of the mother company of EQB. So it's all sort of tied together, but there are mortgages in there. That is coming at them. But I think as more and more people start moving away from traditional banks and start moving to banks like this, I think they're going to do well. I have a positive outlook for them. I think you'll make money back faster with them than you will with the traditional banks for now. For now. Now Go Easy. So GSY. Let's pull this up here. So they're kind of one of them financial institutions. They give you guys loans, and we'll come straight down here. So you can sort of see, like, if you want to buy furniture, electronics, appliances, those are those loans. And they've been doing really, really well. Why? Because people don't have the money to buy stuff right now. So putting them on a loan or a pay to own or things like that, those are pretty popular right now. They're not great though. As an investor, I would never do one, but I understand why people are doing this. And you can sort of see, look at this. You can see we've got a pretty steady growth. So as an investor, this is not a bad choice. But I'll tell you, I don't agree with their business model. That's one of the reasons I don't hold them. I don't agree with their business model. Not to say I've never invested in something I don't agree with. I have, absolutely. I'd be a hypocrite if I said I haven't. But yeah, no, that's the company that's doing well. We almost did a deep dive on them too. I think they came in second a few times. They might still be up for another try next vote, I think. I'm not 100% sure. I'd have to check. But yeah, that's a good old Go Easy. 9 says, do you think DCA into duration on U.S. Treasuries is a good idea or is a good trade if yields come down and you get a capital gain? Here's the thing. In many ways, any things like treasuries, bonds, I would be more inclined to hit them with an ETF opposed to going directly in. Because if you do get a situation where you end up getting a capital gain, it's not something I really want to see, but it really just boils. Like, I think there's a lot of options. Like, I don't think if you're not comfortable with bonds, if you're not comfortable with treasury notes, you don't have to touch them. I think there's a lot of options out there, but if you're going to touch them, I think save yourself a lot of pain. Look for a good ETF that has a track record of doing well with bonds, I think, or treasuries. I think that's the best way to go, honestly. All right. Let's see. Very much appreciated. Thank you. Which stock was she looking at before this chart? All right. Well, let's see. Here's Go Easy. The one before that I was looking at was EQ Bank. And I don't know. I'll go back one more just in case. TD Canadian Equity Index ETF was the one. The other thing too, Michael, is you can always, here's the beautiful thing. You can always pause, right? And just pull it back. Even when it's live, you can still pause, pull it back and look at something. And then, you'll be like a tiny bit behind, but then sort of push yourself ahead forward. Okay, Abalash says, do you feel Go Easy and Shopify will fall a bit if mortgages get affected? It's a good question. I don't. It's hard to say with Shopify. I mean, Shopify isn't really directly, touched in with mortgages, but it does have to do with what people are buying because obviously their portal is online shopping. So it'll be very interesting to see how things are going to work. Now, in some cases, like some people are doing better. So as we sort of talked earlier, if you've got that variable rate mortgage, right now, your rates are coming down. So you may have that extra $80 a month in your budget that you didn't have a month ago. So in some senses, some people are going to be doing a little better. Other people, of course, it's the people who are doing the renewals those are the people who are set to suffer, because all of a sudden they're going to go from a nice low monthly mortgage to something that they may not even be able to afford. So that's going to be the big thing that's coming up. And then there'll be a lot of decisions as well, like, do I go with a variable at this point, or a fixed variable, or or do I just go with a straight fixed? I mean, there's a lot, I think, that's going to have to come into how you should approach it. And some people as well, this is the time that you might even want to look at shopping around. As rates are starting to come down, you might be able to find something that you can lock in at a slightly less rate than what you're currently paying with whoever your mortgage provider is right now. So that's kind of a okay. That's kind of a thing. There we go. Yeah, I meant DCA into U.S. Treasury ETFs. Easier to sell for capital gains. Yeah, I would certainly. Yeah, like I said, I think the ETFs are the way to go when it comes to this way. And yeah, and if you're thinking of selling them for capital gains, why not? Yeah, if you're holding them outside, of course, your registered account, you could do that. And you probably would want to do that because, once we get to the other side and, bonds and treasury notes and things like that start going down, it's not a bad option. It's not a bad option. I really should make a video on treasury notes. I haven't yet. I know I did bonds. Oh my God, it's probably been 2 years since I did a bond video, to be honest. So, whew, that's a little further away, a little far away. All right, everybody. If you got your last minute questions, drop them in the chat, and we'll get to those. Yeah, it's been another great Sunday afternoon. I always enjoy spending some time with you guys. It is always fun. So yeah, drop your last minute questions in. I'll have some coffee while I wait. Oh, that's so good. Also, be sure to hit that like button even before even though you could be thinking, oh, it's pretty much over. Why do I need to hit the like button? It's still good. It's still good. Hit it on the way out. It makes the algorithm happy. Let's see here. Harvest increases ETF dividends. That's fantastic. I like that. I haven't actually looked at any of these increases yet, but that's fantastic. I like that. Yeah, collect the yield while you while you wait too. Yeah, there's nothing wrong with that. There's nothing wrong with that. All right. I haven't heard about TGRO. I may sell some XEQT and buy some. Let's take a look here. TGRO. So here we go. Oh, that's the one we were already at. You can tell I'm getting hungry. But yeah, I do like I said, I like the TGRO. It is a good stock. It is a good stock. And I also like XEQT. But I mean, if you look at XEQT, we'll pull that up. All right. So here's good old XEQT. And just look at the 1 year on that one. It's got a similar movement. It does have a similar movement. I like all equity, whether it's XEQT, VEQT. But where its dividend is a little bit lower, so you have that. But it would be, I would almost say, Kevin, is I would take a look at the I would actually plot out the total return on both of them and compare them before you make a move like that, just to be on the safe side. Now, one advantage that XEQT is going to have is that right now, emerging markets are really, a lot of them are expected to do fantastic next year. So you do have that emerging market exposure within XEQT, and maybe that'll make a difference. I don't know, but we'll have to see. All right. Oh, Mugsy's in the house. Any thoughts on pay? Okay, let's take a look at pay. PAY. All right. I will admit, I've never looked at this stock before, Mugsy. This is a first one. This is a first time. First time. Let's see. Payfair, Class A common shares. Let's take a gander. Let's look at I'm going to go right to the 3 year first of all. Oh, boy. All right. So yeah, we had a bear market. That's fine. 694, no dividend. Let's see here. What exactly do they do? Well, they're fintech. That makes sense. Payfair is a fintech company offering mobile banking, instant payment, and loyalty rewards solutions. Okay. Interesting. Huh. I want to see something here. Let's go into their key data. Well, they've actually got a half decent return on equity, 19.58, 4.82 on return on assets. Nothing listed on their debt, so that'll be interesting. Oh, it's interesting. It's kind of one of these things where, you know, I kind of subscribe to as we get better systems in place and we start to get things like more instant payments within Canada. So as I was talking about last week, the changes to Interac, that will of course make it easier to use things like Vimo and things like that. So you have to sort of wonder, will a company like this, how are they going to fare with that? And also as more adoption with crypto, that's another option as well. So I always worry a little bit about that, but I think in the short term, they're probably going to do okay. But I do like some of these numbers. I like a few of these numbers, but I'm just saying, I would be careful long term. Keep your eyes on them. That's what I would say on the long term. But yeah, but they may do well. They may do well short, midterm, but just pay attention to what's happening. And as we know, even with the changes to Interact, they're not really going to be doing any system testing until next year. So you've got time. And it'll be interesting to see how this company does. Now, mind you, we looked at the 3-year, but when you look at if you look at the 5-day, it looks nice. Let's just go with the 6-month. So the 6-month, they still had a lot of movement down. It's only right about here that we got this big pop in the stock, and I don't know why. I'd have to dig in deeper to sort of figure out what caused that. And is that just a temporary pop? I would watch that. I definitely wouldn't buy here. If I was looking to get in on this, I would hope that this was a temporary pop and it comes back down to like 6. But yeah, I'm not excited about it. Let's see, DXCM, and then bought the dip on Dexcom. All right, DXCM. Let's take a look. All right, DXCM. Here we go, Dexcom. All right. Ooh, well, here's your dip. That's a big dip for sure. Let me just take a look. I want to take a look at the 1 year here. So they've been doing well. Oh my God. And look at that. What happened, Dexcom? What happened? Oh, we're gonna have to take a look in here. DXCM. That to me almost looks like a bad earnings call, but we'll find out. Yeah. Oops, that's not Dexcom. This one's Dexcom. Yeah, here's your earnings. Earnings call. Let's take a gander. Okay, interestingly enough, this isn't that bad, but it's, they did beat their earnings. So, they had estimated at 0.386. They came in at 0.43. But they did miss on the revenue, so coming in at 1.004 billion instead of 1.037 billion. That's not that big of a miss. But aha. So sometimes it's not all earnings. Look over here. So Kaplan, Fox, and Kirshner LLP is investigating Dexcom for potential securities law violations. That's what powered that. That's why they're down so much. It just so happens that they had an earnings at the same time. But yeah, this type of stuff, that can definitely tank a stock. So hopefully they work out on the other end of that. And if they did, buying that dip might work out for you. So that's a risky one, because there's always the danger that if this investigation, if it proves that they were, if they were, if they were having securities law violations, you could go down further. You could go down further. So I would have probably not, based on this, but you're brave, and I hope that this turns out to be a nothing burger, so that way that can come back up for you. All right. Is there a movement towards Russell 2000 small cap? Should I dump QMAX after I receive the dividends next month? There's a lot of economists out there right now that are thinking there's going to be a lot of movement in the small cap. That as your larger cap are starting to slow down, a lot of the smaller caps are starting to pick up. So, for example, with tech, small cap tech is starting to do a little bit better. Now, I am, my next video is on small cap stocks, so I got a few of them out there. I do think there's a lot of potential in small cap. I don't know whether or not you should dump QMAX. That's certainly up to you, but I wouldn't ignore small cap. I think there's money there. Let's see. One thing I don't like about Yahoo Canada Finance, which is where I look for Canadian ETFs, is that it doesn't show management fees. It's always zero when I look. The US Yahoo always shows US ETF fees. Yeah. But the other thing too is, I personally, when I'm looking at an ETF, I like to go to their page. Because if I go to the ETF's page, I can see their management fee. I can see their, their management expense ratio. And sometimes there may be another little fee in there as well, like a trading fee of some sort. I can see that as well. I can get the full picture. I find that you're not going to get the full picture on like Yahoo. Abalash's 3M and A&W spiked last week. What do you think about those? All right. A&W, that's what we're looking at here. So A&W, and actually, let's do it in here, because it'll probably pull up. Do I already have A&W in here? I don't think I do. All right, we'll just do AW .un. All right, so this here is their, all right, we'll pull it up here. Let's go here. All right, here we go. So yeah, so this here is A&W. So they, of course, look at this. I mean, this is a massive. Now, when you look at their earnings, you can see there really isn't anything in here. And that's fine. That's fine, because the news that dropped it is this news right over here. So A&W Revenue Royalties Income Fund, they have a deal to combine with A&W Food Services. So we have these two stocks that are coming together to become one. That was enough to drive that price up. So let's see here. So yeah, it knocked it up 17%. And if I remember correctly, I think that the new shares, So A&W Revenue said that under the management, its unit holders will receive either $37 or one share of the combined company. So that's kind of huge. So if you think about it right now, if you're holding this at $33, you may actually get 37. You may, if they go that route, or if they just give you the combined company share. That's the whole thing. I don't like this, that they're going to do one or the other. So sometimes a company will do it and say, we're going to pay this amount on such and such a date. Then I'm like, especially if I can get that for less than that, I'm there. Absolutely. But yeah, that's what happened with A&W. It's cool. It's definitely cool. And the funny thing is, I wasn't holding any, but I know a lot of people in the community had been holding that royalty company. So holy banana bread. You had a good day. They had a good day for sure. I like it. All right. 3M. What went on with 3M? Let's take a look at 3M. So MMM. There we go. Let's pull up 3M. Once again, it's an earnings call. All right, let's see here. What did they do? Oh, they had a really good earnings. So look at this. They were estimated to come in at 1.683. They came in at 1.93. Revenue, they were expected to get 5.854 billion. They got 6.019 billion. Yeah, they did fantastic. That's a good earnings call. And well, you can see a good earnings call can certainly lead to a nice pump, and that's exactly what happened. And Vic is saying, kicked my own butt for not getting MMM at 89. I hear ya. I hear ya. NVIDIA good. NVIDIA is king. I do like NVIDIA. I do like NVIDIA. I think that NVIDIA is going to do fine. There's, you can sort of say, well, they're kind of lagging right now. Well, yes, they're having a bit of a correction, but give them time. They're going to pick up steam again, and they do have. Usually, after all of the other tech companies come out, then we get the NVIDIA earnings, and I think their earnings are still going to be kind of okay this time around. So I'm anticipating they'll do well. I'm still very bullish on them. What do you think about the Rails company and CNR? Well, CNR is one of my favorite stocks. I'll put that out there right now. Big fan of CNR. They're an essential part of the supply chain. So one of the big areas that CN does is the Canadian North. So up where we have a lot of mines, up where we are pulling a lot of those critical elements from the earth, CN is up there to transport it all back down to the main part of Canada so that we can ship it out, sell it, process it, do whatever we need to do with it. Now, when you look at Kansas, when you look at CP Kansas Southern, that railroad, they've got another huge advantage for them. They're the only railroad in North America that has contiguous lines that go through Canada, the US, and Mexico. So that's huge as well. So both of our Canadian railroads, they're set up for success. They really are. Like I said, I'm bullish on both. Like I think CP, because they're smaller and perhaps a little more agile, they may have bigger growth in the short to midterm. But I think long term, I think you can't go wrong with CNR. Let's see here. Going to be a number one company this year. Yes, long live the king. Okay, so L, here we go. Good thing you remembered. Good thing you remembered. Let me get back to. All right. So we got LW. So Lamb Weston Holdings. Okay. Whew. All right. Let's go here. They have not been doing well. They've definitely not been doing well recently. Now, which one's going to be okay next quarter? That's a good question. Good question. So I'm going to take a look here. I want to see a couple of things in here. That's a fantastic return on equity. They do have a lot of debt, 188% debt to equity ratio. But they do have some solid numbers. It looks like they have a pretty good, looks like they have a solid moat. So I'm liking a few things that I see here. So I think they're going to recover. But let's take a look at the other company first of all. So EW. All right, let's go to EW. So here we go. East West Petroleum. No, you're not looking for East West Petroleum. I can tell you that right now. Whoops. EW. You're looking at Edwards Life Science. Yeah, I know we looked at this the other day as well. All right, so we get the same kind of thing. Let's go to the 6 months. We got this one big drop here. This makes me think that they had an earnings, and I'm going to say that they probably did. But now we're looking at next quarter, so they definitely have some recovery on the way. Let's see here. Let's go in very quickly and take a look at that key data. All right, so their numbers are a little lower here, but they have a lot less debt. They only have a 10% debt to equity ratio. So that's not too shabby. I think they have a lot of versatility when it comes to figuring out what's going to happen next year, what's going to happen next quarter. So between the two of them, it's kind of a hard call. I probably would side with EW. For one, life sciences, I think that's going to be huge. Two, they've got less debt. I like that. It gives them a lot more wiggle room. Now, HELE, let's take a look at this one. All right, and that's good old Helen of Troy. So I know we looked at this the other night, actually. All right, so once again, they've been on a steady move downwards. So they make a lot of, and I think it's personal hygiene and makeup and things like that. But let's go into their key data here and take a look. They're sort of sitting in the middle when it comes to their debt to equity, but they do have a lower return on equity. They have a lower return on assets. So of the three of them, I do like the life sciences one, I think, a little bit better. It's kind of one of these things, like with a lot of, I think the products that Helen of Troy makes are going to be in demand for sure. But I see increasing demand in the life sciences. So I'd like that. I like that idea. So I think they're going to be fine. What about ASML? Oh boy. All right. ASML. Let's pull this up here. All right. So ASML Holdings. Here we go. Take a quick gander here and take a look and see. So we come down a little bit, but holy cow. Of course, a little bit is like, almost, no, not almost, but it's about $120 or actually no higher. It's closer to, it's about 200 in total that you've come down. So that's, yeah. Now, when you look at ASML, so let's take a look here. All right. So they do that whole photolithography systems. So basically semiconductors. There's been a little bit of a back, and a lot of it comes from everything from Biden to just right now there's a slight lag in that need for semiconductors, but that's not going away. And that's a temporary thing. So this is going to be, I think this company will be fine. I think they'll be fine. I think they'll be back up here sooner than you think. So I do like them. I do like them for sure. All right. They have a monopoly. Well, maybe. Let's see. NVIDIA, ASML, I'll get to hold. Yeah, for sure. All right. CrowdStrike also. Whoops. AI is touching it. AI does touch everything for sure. For sure. All right. Let's just see here. Hawaiian Electric and another one that peaked in the last 2 weeks as well. All right. Broadcom. Oh, yes. There's always AVGO. So, yeah, I do like Broadcom as well. All right. That fire was horrible. Yeah, absolutely. There's been too many fires in the last few years for sure. All right. I'm going to jump ahead because, a little bit here. All right. 100% research ASML more. There we go. All right, guys. Oh, boy. Well, there we go. We did 2 hours today. Add that to Friday, and we're up to 9 hours. So there we go. We'll leave it at that. All right, I'm gonna go grab some supper. You guys, I want you guys to enjoy the rest of your day. Oh, let's go big screen for this. Enjoy the rest of your day. Have fun tomorrow with the market. We will be back here live again on Wednesday. We'll do a market close as usual. And we, of course, have the small cap video coming out on Tuesday, Monday for channel members. So I can't wait. It'll be a lot of fun. Thank you guys, as always, for hanging out with me Sunday afternoon. Always a good way to end the weekend. Until next time, everybody, take care, and we'll see you soon. Bye.